the CFO at the company, now joining us. Good morning. Okay, so I'm going through your numbers. So as I said, we've seen a quarterly revenue report that's come in. Margins. Now, this earnings season has been about margins, right? Because of inflationary pressures and how companies have tried to withstand that. Your margins are flat at 11%. With the kind of softness that we've started to see for commodities, any guidance you can give the street for Q3, for Q4?
Yeah, so in terms of margins, as you would have seen, margins have, while they are flattish, I think towards a positive bias versus 10.4% in the previous quarter, we have delivered 11.1% in the last quarter. And we all know the commodity pressures, be it the electricity prices, be it gas prices, India, overseas. I think there have been a lot of negative impact, but because of the operating leverage and the kind of record revenues we have been able to deliver, we have been able to withstand that pressure of the rising input costs and have been successful in delivering the margins into our stated guidance of 11+% kind of a range. Going forward, as you have asked, we are pretty confident that as the momentum continues, you know very well that 90% of our revenues actually are dependent on our customers, which is the OEMs. So as of now, we all know that there have been a long waiting period for specifically the PV segment. So that sector definitely looks very good and promising. In fact, the last quarter, as you know, as a country, we have done volumes of more than 1 million cars during the quarter, which was the highest ever. And we believe that with the strong order book pipeline, that trend should continue. And in that momentum, even in the two-wheelers have done pretty well in the last quarter. So let's see once the volumes come out for this month, how things are. But as of now, things look much better than what they were the same time of the last year. So we are pretty confident that this momentum of the record revenues which we have achieved in the last quarter should continue. Obviously, as you rightly mentioned, as I said a little while back, the industry volumes plays a key. But from Minda perspective, Uno Minda perspective, we have been very clear that whatever industry grows, we need to grow more than that. So if we see last quarter to this quarter, the industry overall volumes have grown by 12%, but we have grown by 36% in terms of our top line. So that clearly demonstrates the kind of delta we have been able to generate, even if one were to exclude the benefit out of the commodity prices in terms of revenue. So we are pretty confident going forward in Q3 and Q4 based on the product order book and the pipeline we have, that the trend or the momentum to continue.
Yeah, we're also talking at a time when we've seen that better inflation reading that's come in from America and the markets are rejoicing. And there's been so much chatter, soft landing, recession, hard landing. That's for Europe, it's for America as well. Your overseas business, how has that been doing? How are you also reworking your order book? Has it been impacted at all with the headlines that we're getting from overseas?
No, absolutely. There has been some impact in terms of volumes for our exports and the revenues in Europe and America. Overall, it's a very small impact because we have been able to consistently add more and more business. But if you see on the continuing business, yes, there has been some impact. But specifically talking about the cost pressures, etc., in Europe, yes, there is a significant cost pressure because of the gas prices, electricity prices, and also the inflationary prices, coupled with the volumes continues to be impacted because of the semiconductor shortages in Europe, because we all know that the electronic component in the vehicles in Europe is among the highest. So there still we see some impact because of the semiconductor shortages, which are yet to get normalized. Yes, things are much better than what they were, but they are not as one would have expected with the strong order book there. But in terms of ASEAN, where we have manufacturing plants in Indonesia and Vietnam, I think things are much better, and we have been able to deliver the record revenues and performance there as well compared to the previous quarter. So as of now, overseas, it's a little mixed bag. From ASEAN perspective, things are much better, and from Europe perspective, there are some headwinds, but because of our more new business we have been able to generate, and also the additional products which we have launched into our German business, we have been able to sort of withstand the headwinds.
plans for a new plant capex of 400 crores over the next 5 years, and then with Bühler Motor as well, which is the JV in Germany, there is a capex of close to 110 crores that the company plans to undertake. So what is the plan to fund this new capex?
So as of now, we are pretty well placed in terms of our funding. Our debt equity or the gearing ratio, as you say, it stands very strong at 0.1%. And with excellent free cash flows, if you see in the first quarter, we had free cash flows or the PBDT of almost first half of 600 crores, which was utilized to fund not only the incremental working capital for the kind of revenue growth we have delivered of almost 36%. We have also been able to fund all our capex programs in the first half. So with that kind of strong performance, we are pretty confident that we should be able to fund our capexes primarily from the internal accruals. Yes, there may be some short-term leverage for some timing mismatch, but overall, I would say we are very, very comfortably placed to fund these capex expansion programs.
Speaking of the joint venture, just tell us what is the ROI expectation from this joint venture investment, and in how many years will you see it flow through?
Yeah, so this joint venture, as you have said, this is for manufacturing of EV motors. You know that we have got one of the most formidable product pipeline from the EV products perspective, and this motors being added adds to it. We already had a motor controller. So we are pretty confident that as the volumes grow, EV volumes, we all know they are very small as of now, it's roughly around 3% to 4% of the total two-wheeler volumes. So as it grows, definitely our revenues also will grow. Our expectation based on our internal estimate of the volume is that in next 5 years, we should be able to do something around 400 to 500 crore kind of a revenue from this joint venture. And in terms of return on capital, our target has always been that in the third year of production, we should have at least 20% pre-tax ROCE. And based on our detailed project report, we are pretty confident that we should be able to achieve those kind of returns.
We'll let you go on that note. Thank you so much, Mr. Bohra, for joining in and giving us a view on the overall numbers as well as your capex plans going forward. Time to slip into a very quick break. Be right back.